A level on your chart is only a location. Think of it like a GPS coordinate, but confirmation, that is the evidence you need to actually take a trade. You don't just drive because the GPS says you're there. You look at the road first. In part 6 of our series, we're learning how to read the confirmation candle. This is the single most important skill to avoid getting trapped by the market just because price touched a line on your screen. Let's do a quick recap. We know the trend gives us our general direction. Are we buying or selling? And we know support or resistance gives us our high probability location to look for those trades. But professional traders don't just jump in at a level. We wait for the market to prove it wants to bounce. That proof comes from the candles. Today, we're going to learn exactly what those candles look like. First, we have to master candle anatomy. Every single candlestick on your chart tells a story of a battle between buyers and sellers. It's made of two main parts, the body and the wicks. The body represents the range between where the price opened and where it closed during that specific time frame. If it's a green candle, it means the price closed higher than it opened. This is bullish momentum. On a red candle, the price closes lower than it opened. This shows us bearish momentum. The size of the body tells us how much conviction there is behind that move. Big body, big conviction. Small body, indecision. Then we have the wicks, or shadows. These thin lines show us the highest and lowest points the price reached before the candle finished. They represent failed attempts by one side to push the price further. A strong bullish candle closes right near its high with very little upper wick. This tells us the buyers were in total control the entire time. This is the kind of candle we love to see at support. Conversely, a strong bearish candle closes near its low. This shows intense selling pressure. When this happens at resistance, it's a clear signal that the bears are ready to push the market down. Now pay attention to long wicks. They are like a keep out sign. A long lower wick at a support level means the price tried to break lower, but a massive wave of buyers pushed it right back up. We call this rejection. A long upper wick at resistance shows the exact opposite. The sellers are defending that territory. This rejection is often our first hint that the level is going to hold and the price is about to reverse. One of our favorite signals is the bullish engulfing pattern. It happens when a large green candle completely swallows the previous red one. It's like a knockout punch from the bulls right at our support level. We also look for a break of minor structure. This is when price makes a higher low on a smaller time frame and then breaks a recent minor high. It's the first sign that the short-term trend is flipping in our favor. For sells, we look for the bearish engulfing at resistance. This tells us the sellers have completely overwhelmed any remaining buyers and are prepared to drive the price into the ground. It's a high probability trigger. I need to remind you, this is for educational purposes only. It is not financial advice. Forex trading is incredibly risky and most people lose money. Only trade with money you can afford to lose and start on a demo account. The biggest mistake beginners make is entering the second price touches their level. Don't do it. You're just guessing. You must wait for the candle to actually close to confirm the level is holding. Patience is profit. We call this confirmation candle our trigger. It's the candle that gives us permission to enter. It also defines our invalidation point. If price breaks below the trigger candle, our trade idea is officially wrong. Let's look at a real example. Price pulls back into our support zone and hits the gold 20 SMA. Look at that long rejection wick forming. The market is screaming at us that it doesn't want to go any lower. We would place our entry just above that trigger candle's high with a stop loss safely tucked under the recent swing low. Don't worry about the exact math yet. We're doing a full trade setup lesson in part 7. Now look at this short setup. Price rallies right into our resistance zone. We get a bearish pin bar with a huge upper wick. That's our confirmation that the sellers are in control and the rally is over. Time for a pop quiz. Look at these 3 candles at a support level. Which one provides the strongest bullish confirmation to enter a buy trade? Take a second to look closely. A, B, or C. If you chose A, the bullish engulfing, you're on the right track. It shows the buyers completely wiped out the previous selling pressure. That is a high conviction signal. Quiz number 2. Which of these 2 candles shows a clear rejection of a support level? Is it number 1 with the long lower wick or number 2 with the tiny body and small wicks. Which one shows the struggle? It's number one. That long lower wick is the visual proof that the market tried to break the floor and failed. That's the evidence we look for every single day. Let's talk about the traps. Don't chase a massive candle that's already moved halfway to your target. And never enter before the candle closes. Many rejections turn into breakouts in the last 30 seconds. Finally, don't force confirmation on a messy chart. If you have to squint or ask a friend if it looks like an engulfing candle, it probably isn't one. The best trades are the ones that scream at you from the screen. Before every trade, run through this checklist. Is the trend with me? Am I at a key level? Have I seen a clear reaction candle? And most importantly, has that candle closed? Don't skip these steps. Here is your mini assignment. Go to your demo charts and find 10 bullish and 10 bearish confirmation examples. Screenshot them and label exactly what made them valid or weak. This is how you build an eye for the market. You're doing great. In part 7, we're putting everything together. Trend, pullback, confirmation, and fixed risk management. This is where you learn to trade like a pro. I'll see you in the next lesson. Stay disciplined. Progress takes time.